Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market and look for something to trade. Well, if you've been watching the market at all, you see we've been on an absolutely wild ride. We took this huge dive over the last couple months. Then I think maybe we were all fooled. Like it shot up for a few days, and everybody was thinking everything is honky-dory. And then the last 2 days of the week, it came right back down. So we're kind of near the lows of the whole year at this point. So what are we going to look to trade? So we're going to go over here to Docusign. One reason is earnings is over, and they're kind of an earnings season now, so we've passed this, and that's why this volatility was so high. So this area of volatility was kind of leading up to the earnings, and you can see similar thing here. This is earnings, and this volatility was leading up to the earnings. So for the most part, as you can see where it is now, it's kind of essentially like a little bit above average. Outside of earnings, this is kind of as high as it's been for the last 6 months. And volatility is still pretty good. It's at 49. So what we're going to do here is we're going to do something called a skewed Iron Condor. And I'm going to show you how you set that up. And there's multiple ways to do it. This is a certain way I like to do it to increase our odds of success. So assumption number one is, first, volatility is decent. So we're going to do this Iron Condor. Again, it's at 49. My assumption here is we're obviously near lows for Docusign. So as a contrarian, my thought process is from here, it may go down a little bit, but over the next 45 days roughly that we're going to make this trade, I'm betting it's going to hopefully creep up. So it may go down in the short term, but hopefully over the next 45 days, it kind of tends to bounce back up because we're at the lows. As a contrarian, I think from here, hopefully there's a better chance it goes up. Nobody knows the answer. That's just purely an assumption based on my contrarian look at the markets. Anybody who's a trend trader might just say, hey, it's been going down for the last couple months, it's going to continue to go down. Totally choices that you have to make as a trader. Again, I'm a contrarian, not a trend trader. So no difference in the fact that we just look at the market differently, which is why there's a market. If everybody thought the same thing, nobody would take the other side of a trade. So the assumption again is we're going to basically bottom out pretty soon here, and over the next 45 days hopefully start to trickle upwards. So if I go to a trade page, what I'm going to do is I'm going to start here at the 47 days because tomorrow that'll be 46, which is right what we like. And I've already set this up. We're going to say the stock price here, for ease of math, is just 48. So what I'm going to do here is I'm creating a skewed Iron Condor that I'm skewing it to the upside. My bet is over the next 46 days, this will possibly go down a bit more, but over time it'll start to trend back up because it's going to hopefully bounce. That's my belief, my assumption. So what are we going to do? Well, we're going to sell a put closer than the call side. That's how we start a skewed Iron Condor. And we can start it anywhere. This is just one version of it. So again, it's $48 is we're going to say the stock price. So I'm going to go down $3 to the put, and I'm going to go up, as you can see here, about $9. So I'm $9 away on the upside, only $3 away on the downside. Again, that's because I want this skewed. I'm putting the downside closer because I believe the stock price is not going to go much below 45-ish and then start to trickle back up. So I want to leave room to the upside, room for it to kind of bounce and go higher. The other thing I'm going to do is when I skew it, that's one way to skew it already. You just put the put side closer than the call side. The other thing you can add into a skewed Iron Condor is you can take away risk completely from one of the sides. What do I mean by that? So this is a $2 wide call spread on the upside. If I sell this whole Iron Condor for $2 or more, and you can see right now it's 201, that means even if the stock shoots way up and goes to 100 and goes through all my call strikes, I still don't lose any money. Because this is $2 wide. If this thing goes against me, if the stock went up to 59 or 60, anything above 59, this is a full loser. So this would be a $2 loser. But I'm collecting $2 on the skewed Iron Condor, so I have no risk to the upside. Doesn't matter how high it goes, I can't lose any money there. But the way I do that is by making the put side a much bigger put vertical. See, this is $5 wide. So when I collect $2 here, that means I can lose $3 on this side. So that's a skewed Iron Condor. I'm basically taking the risk off of one side. I make one side wider, and as long as I collect enough credit to cover the other side, which in this case is $2, then one side is completely risk-free. I still want it to stay below 57 in the end, between 45 and 57 for this to be a winner, But it doesn't matter if it goes too high in this scenario. Anything high, this credit covers the width of my strikes, and therefore I cannot lose to the upside. I can only lose to the downside. In order to make that happen, I have to make more risk on the downside. So again, this is $5 wide, 45.40, $2 wide on the upside. So that's a skewed Iron Condor. You can skew it two ways, putting one side closer than the other. The other thing you can do is you can skew one side, make it wider than the other, and if you collect enough credit to cover the opposite side, as we did here, we have no risk to one side, and that's another extra kind of scenario along with the skewed Iron Condor, one extra tweak you can make to your Iron Condors. So that is our trade in Docusign for tomorrow. Hello everybody! First off, thank you so much for watching my videos. I always appreciate when people take the time to watch my videos and learn from me. But in the end, I've got a great opportunity for you, because really what this is all about is learning to generate an income stream. So all this knowledge is great, but until we put it into practice, what is the point of it all? At that point, it's just knowledge, but without putting it to practice, it's of no use to us. So I've come up with a way, I believe, to teach you how to generate an income stream with all this knowledge you're learning from me. So if you head on over to Sharper Trades, right there, sharpertrades.com, and you go to the products section, you'll see I have two alerts. They're the exact same alert. The only difference between the option and the pro is that this includes all my courses, unlimited access for as long as you're a member. But this is the one I want to get you up to date on, the alert. And what this is an alert I put out in real time, 2 to 3 times a week, real trades I do every morning, and also when I close them to maximize my profits. So I want to teach you how to generate another income stream, and I believe this is the best way. So if you go on over to sharpertrades.com, you type in this coupon code right here into the basic option alert. Normally it's $49 a month, but because I'm so interested in getting you up and running as quickly and confidently as possible, if you go there now and type in that code, it's only $1 for the first month. So not 49 bucks, $1, and you can get onto my alert system and see if you like it and learn to start generating income today by just typing in this code. And again, you can cancel any time. If you stick around for more than a month, obviously it'll go to $49 a month. But for $1 a month to learn how to generate an income stream, I believe that is a great opportunity. So hopefully you all jump on this and start learning to trade with me in real time, kind of right next to me as I trade on a daily basis. And for those that don't know, these are all my courses that I have up on Udemy. A lot of people don't know that these are a 3-part course. This is part 1, understand. Part 2 is the option strategies, and part 3 is make and manage profitable trades. So if you weren't familiar with that, this is a 3-part series. Now you know. So if you're somewhere in the middle or the beginning or the end, you know where to start and where to finish. And of course, I have a couple other courses there. So head on over to Udemy and learn more, and then take all that knowledge and join my alert service and start learning how to turn that knowledge into income. Hope to see you soon.